Boom. KOSPI up 5.42%. This is a massive structural breakout. No fluff today, we're jumping straight into the numbers because honestly, the market is moving way too fast for anything else right now. What we're looking at here is a fundamental shift, and it's being triggered by a perfect storm of global and local catalysts. Just let that sink in for a second. A 5.42% surge on the close. This is a stark, indisputable market reality. Look, when an index of this sheer size moves over 5% in a single trading session, you are absolutely not looking at some fleeting retail momentum. No way. You are watching institutional repositioning on a massive, massive scale. Just look at this complete sea of green across the board. This breakout is specifically anchored by the electrical and electronics sector, which closed up an incredible 7.72%. The heavyweights literally dragged the index higher today, and they did it with absolute conviction. Section 1. The Micron Shockwave. Structural Demand Confirmed. $100 billion. I mean, wow. That is the unbelievable scale of Micron's minimum cumulative revenue commitments. We're talking about 14 strategic customers locking in take-or-pay agreements that extend out up to 5 years. This doesn't just tweak the market, it changes the entire game. So let's stack the logic here. Fiscal Q3 revenue hit $41.46 billion, right? That's a solid 16.2% beat against consensus. But honestly, the really crucial takeaway is the underlying shift in the demand structure. High bandwidth memory, or HBM, has officially evolved from cyclical short-term ordering into long-term contracted supply. And with the CEO flat out confirming that supply constraints can't be resolved before 2028, well, that pricing power is entirely locked in. And here's the kicker. That structural demand confirmed at Micron applies directly to Samsung and SK Hynix. They supply the exact same HBM market, meaning their structural demand is practically identical. Institutions picked up on this instantly, funneling a massive 3.32 trillion won in net equity buying straight into these two Korean giants. And the result? An explosive 13.06% upward rip specifically for SK Hynix. Samsung wasn't left behind either, advancing 5.29%. Guys, this isn't speculation. This is pure, rapid repricing based on confirmed, contracted future revenues. Section 2. The Nasdaq ADR Catalyst. Global Access. $29.4 billion. That is the unprecedented, staggering potential scale of the SK Hynix ADR offering. To really put the sheer magnitude of this into perspective, it actually surpasses Alibaba's historic 2014 Nasdaq IPO, and yep, even Saudi Aramco's massive 2019 listing. Mechanically, here is the big shift taking place. Direct U.S. Nasdaq access is opening up for global investors, and it's being backed by the absolute heavyweights. Bank of America, Citi, Goldman Sachs, and JP Morgan. This move clears the path for SOXX index inclusion, with analysts already eyeing a rebalancing in September 2027. Global passive funds are literally pre-pricing that inflow as we speak. So while SK Hynix's core business value obviously remains the same, this geographic expansion of their shareholder base structurally elevates the valuation, which completely lifts the implied value of SK and SK Square's parent holdings. Section 3. Macro Fuel, Yields and Discount Rates. Now, geopolitics and bond markets practically shifted at the exact same time. We've got upcoming U.S.-Iran ceasefire talks in Switzerland, Energy Secretary Wright confirmed pre-war transit levels, and boom, the Hormuz geopolitical risk premium immediately compressed. WTI crude oil fell to $69.48. Those falling energy prices actively eased inflation expectations, and global bond markets priced in that exact shift instantly. U.S. 10-year yields dropped to 4.387%, and Korean 10-year yields fell to 4.137%. So why does this matter? The crucial point is the mechanical relationship between these two forces. It's pretty simple, actually. Falling bond yields reduce the discount rate. For high multiple semiconductor stocks that have their earnings concentrated far out in the future, a lower discount rate instantly sustains a risk-on environment. Valuations rise. This mechanical relationship essentially cleared the runway for both Micron's $100 billion demand structure and SK Hynix $29.4 billion ADR. Section 4. The Hidden Short Squeeze, Forced Covering. Check this out. On June 24th, foreign investors concentrated some wildly aggressive short positions in SK Hynix. It actually ranked first in KSPI short selling volume, hitting a 5-session high. They were basically hedging against Micron earnings uncertainty and 14 months of accumulated gains. But then, the US market closed and that massive Micron beat hit the wire. Overnight, those short positions turned into absolute crushing losses. This trapped foreign capital led to a massive 31.7% collapse in total KOSPI short selling volume. The foreign share of that short volume plummeted from over 82% down to about 67%, as trapped shorts were forced into active, desperate covering throughout the entire session. Just imagine the market impact of that. You've got panic short covering colliding directly with massive institutional long buying. Financial investment firms led the charge, and we saw 2.47 trillion won in institutional long buying meeting those forced covers head on. This violent collision is the exact mechanism that created that incredibly fast 13.06% surge in SK Hynix. But you have to keep your eyes on the underlying data here. These futures positions signal structural hedging, not just your routine profit taking. Even as they scrambled to cover their equity shorts, foreign investors maintained massive futures selling. We're talking net selling 2.78 trillion won in KOSPI 200 futures. That futures position is over 3 times larger than their equity position. They are structurally hedging against shifted FOMC rate projections, specifically those September expectations, all while still completely capitulating on their semiconductor shorts. So, with a staggering 100 billion locked-in structural demand and global capital flooding the gates, the question isn't whether the semiconductor landscape has changed. The real question is, are global portfolios reacting fast enough to actually catch up? If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.